Nothing. Nothing but. Nothing but net. Net.
Welcome to Nothing But Net, the podcast for triple net commercial real estate investing. Before we get into the meat of today's show, let's recap on why there's so much interest and buzz around net properties. Triple net properties are commercial real estate investments where the tenants, usually brand name corporations, pay you rent every month. Can you say mailbox money? In addition, they pay the real estate taxes, insurance, and maintenance for the property. No toilets, termites, or taxes. What's not to like? You can remember what net or triple net stands for by using TIM, taxes, insurance, and maintenance. With triple net properties, there's lower risk income and cash flow because rents are guaranteed by strong credit tenants. Preservation of wealth, because rent increases and property appreciation are bulwarks against inflation and a great store of value. Tax efficiency, the government wants investment in commercial real estate, so they provide inducements through depreciation and deductions which shelter income from taxation. Tax deferral, which gives potential for infinite tax deferral with 1031 exchanges, which are very popular in the triple net space. Triple net properties are a tangible asset, and as Mark Twain once said, buy land. They ain't making any more of it. Hello, and welcome back to Nothing But Net, the podcast for triple net commercial real estate investing. I'm your host, Adam Carswell, joined as always by our co-host, Michael Flight, CEO of Liberty Real Estate Fund, and we have an amazing guest. Also, as always, with us here on the show today, Chris Drzyzga. We're going to get a little bit into Chris's background here in a moment, but do want to flip it over to Michael real quick. Michael, how are you doing? It's been a little while. Happy to reconnect and dive into this interview here today.
Doing great. Wish I was in sunny California like Chris, but we're really excited about this topic. This is a topic that a lot of people in any type of real estate have never even heard of. It's called the sale-leaseback, and there's also installment sales, which is what most people have probably heard of, but most people don't, have never heard of a sale-leaseback and never heard why it's so cool, because what you are doing as a property investor is basically financing the expansion of a tenant or the, operations of a tenant, and you're solving their problem and they get to continue to stay in their space. So we're really unbelievably excited about it. And Chris is one of the experts in this area. And so why don't you, give us a little bit of background on Chris?
Sure. Yeah. Chris is with Voit Real Estate Services, which is a regional brokerage headquartered out of Irvine, California. You can see if you're tuned in with us on video here today, he's got about a dozen rewards behind him on the wall, and he's had a pretty successful 2021 from what we picked up on here coming into the interview. So Chris, actually, if you could just shed a little bit of background and light on your story.
One of his awards was the Grinder Award.
He's putting in that work.
Got to
tell us a little bit about yourself, Chris. Just a quick story, and then also, what you're working on right now with Voit.
Yeah, thanks so much for having me. I'm a commercial real estate broker based in Southern California, specializing in office and industrial properties. So appreciate you guys having me. Michael, really loved your discussion with Nick Hilaris on the Real Vision Network. Loving what you guys are doing there with the Liberty Fund, and watching it closely. So definitely rooting for you guys.
Yeah, and that's actually how we met, right? You had seen the Real Vision stuff, and yep. Chris is also a crypto enthusiast too, from what I understand.
You'd be correct.
Nice. I guess on that note too, real quick, Michael, before we dive in, I always like to get a little update on how things are going with Liberty. So you got a 30-second inside scoop for us?
Well, Liberty Fund is just doing great. We've had a lot of progress, and we've been working through, some technical issues, but, we just have an offering out there right now for, a portfolio of 5 properties. And then the other thing is that the Blockchain Real Estate Summit is going to be happening again September 23rd and 24th in Austin, Texas. And we are also working with a joint venture partner to do a blockchain real estate summit, or more of a blockchain summit in Panama, South America, to handle all of South America in early 2023. So it's just been fantastic. I had a really great weekend doing a presentation to Think Multifamily, and the whole Think Multifamily. If people are in multifamily and interested in learning more about it, they should definitely go to Think Multifamily. And was able to go out to dinner with Russell Gray of the Real Estate Guys, who are also some of my favorite people in the world to hang out with. So with that, let's talk about sale-leaseback and all the cool stuff that Chris is doing. And Chris, can you give us a little bit more about Voit and what you guys specialize in? And because some of the people that aren't in California might not have ever heard of Voit.
Yeah, sure. Voit's a regional brokerage. We have 6 offices in Southern California, kind of Santa Barbara South, if you will. Company's been around for 50 plus years. And, over that course of time, we've had development arms, we've had property management arms, in addition to brokerage. So companies expanded and contracted over the years, had some offices out of state. And, we've really found kind of our sweet spot the last, call it 10 years or so, just focusing on the Southern California market. It's our backyard. It's what we know best. And it's served us very well, just being a little bit more laser focused on the brokerage side specifically. Voit is primarily known for industrial real estate, leasing, sales, development. Industrial sector's really been our bread and butter, but we got 250 plus brokers, and you'll find folks that are in the multifamily sector, office, retail, so on and so forth. So it's kind of the overview.
Can you give us an idea? Because Southern California is probably like at least number 1 through number 3 in terms of industrial real estate, markets, and just super huge in the world.
Yeah, one of the, like I said, top 3 industrial markets in the country, if not, the globe, arguably. Developers can't build fast enough. Whether it's Orange County, Los Angeles, the Inland Empire, may be a little bit more familiar for some of your listeners. That's really one of the big hubs for this type of product. But like I said, they can't build it fast enough. We've been hovering in that 1.5% to 2% vacancy for the last handful of years, and sale prices are through the roof. Lease rates are finally, they've been appreciating substantially, but they've really caught up to the sale pricing, which is going to dovetail into our sale-leaseback discussion here quite nicely. But it's a very dynamic industrial market here. We have the Long Beach port, supply chain, all that. So a lot of different rabbit holes we could go down in this discussion.
And probably a lot of the people that are listening are familiar with, triple net leases like the McDonald's and Starbucks and things like that. But what are some of the industrial products when you talk about industrial? Because, traditionally, California, especially Southern California, was a super huge aerospace manufacturing, airplane manufacturing and all the rest of that stuff. And so what other types of industrial properties in what do you see, the most growth in right now?
A lot of distribution, last mile logistics are huge. You have just you have a very dense demographic base here. So the Amazons, the Targets of the world, they need to be able to fulfill those orders in a timely manner. So you see a lot of those facilities either being gobbled up or even renovated and retrofitted to accommodate that type of use. A lot of the manufacturers, whether you're in the aerospace sector or otherwise, I hate to say it, but you're starting to see a lot of those folks move to more friendly jurisdictions
Texas.
or yes, exactly,
Elon
municipalities.
Musk.
Texas is a big one, absolutely. There's a big aerospace manufacturer here in Orange County that's in the process of transitioning their operations to the state of Florida as well. So a lot of moving parts and very exciting time.
And just one additional thing, since my background has been traditionally in retail, and I know some of the problems with it, but have you seen anybody taking vacant anchor tenants in retail shopping centers and converting those into last mile industrial, or is it too difficult to, retrofit?
No, it's definitely a case by case basis, right? Depending on the property specs and some of those other criteria, but that's definitely on the front burner, and folks are looking at that pretty intently.
Because with the distribution, you need higher ceiling heights, correct? And sometimes better dock access than what you can get in a retail center.
Exactly. The clear height and the dock loading is pivotal. And, for guys like us that live and breathe this every day, we kind of take it for granted. But if you're on the outside looking in, that clear height, just another 3 feet in clear height, 5 feet in clear height from an operator's perspective goes a really, really long way.
Because it's really the height of the pallets and how much they can, stack those, correct?
Exactly. The racking systems for sure.
Okay. All right. Well, Adam, do you have any questions?
Yeah, well, first I got to say, I think that was the first time we ever had Elon Musk's name dropped on the show. So there you go. Thank you, Michael. And yeah, we're talking about installment sales as well. I'll be completely honest. I am not familiar with what an installment sale is. So let's go ahead and do the fundamentals, if you will. Could you kind of walk us through what is a installment sale? And
yeah, well, and actually, Adam, that's a little less interesting right now than the sale-leaseback. So let's hit the people with the sale-leaseback stuff and then circle back to the installment sale. Because once you hear what an installment sale is, you're going to say, oh, yeah, that's great.
Okay. Yeah. Well, then, yes, sale-leaseback. I mean, same thing, though, fundamentally. I mean, where do we begin? What's the first thing to kind of be aware of when entering into this type of deal?
Well, we'll hear Chris do his pitch to, prospective owner.
Yeah.
Yeah, I mean, you mentioned it on the outset here, Michael. The sale-leaseback transaction is where a business also owns the real estate they occupy, and they make the decision to sell the real estate to an investor, and they turn around and sign a long-term lease with that investor. So the business owner uses those sale proceeds to typically expand operations, buy equipment, whatever that may be. The investor, in turn, acquires a 100% leased asset day one, and the business doesn't have to incur any of the costs or the downtime and disruption that comes with relocating a business.
And let's go from, because there's going to be a lot of investors on here saying, well, why wouldn't you want to own the real estate? So, why would a business that's owned their real estate, why wouldn't they want to own it anymore?
A variety of reasons. I mean, a lot of variety of reasons, and you're freeing up capital, right? The sale leaseback really started to gain traction in the late 70s, right? And it was primarily large corporations. They would sell the real estate to an investor, use those proceeds to expand the business, right? At the same time, it was also an interest rate arbitrage to a certain extent, because you could go to B of A and get a loan for 8% interest, or I could sell the real estate to an investor at a 7 cap and pocket that 100 basis point spread, put that 100 basis points to a more productive means. So very specific to the business owner, but the most likely candidates for this is a business that has a specialized facility. It's either very difficult or very costly to duplicate, right? That's really the biggest piece. I mean, you're also going to have the folks that are looking to reduce their debt, maybe lower their risk, or maybe even just want out of the real estate game altogether. That's actually becoming a
yeah, and that's a key thing. It's like most of these people are in business doing something else, so they don't want to be in the real estate business.
correct. Yeah. A lot of these owner users, they bought the buildings a number of years ago. They've appreciated dramatically, and no matter how they look at it today, they're looking at windfall profits, right? So you have these business owners that may be 3 to 5 years away from retirement, right? And they're sitting back saying, I have the business to deal with and I have the real estate to deal with. We are 10, 11 plus years into this real estate cycle. How much more room do I have to run, right? But I'm not ready to to close the business just yet. So the sale-leaseback makes it a really good option, because I can, as a 60, 63-year-old, whatever that may be, I can sell my real estate, get my proceeds there, take some chips off the table and lower my risk profile, sign a lease back for whatever that is, 2, 3, 5 years. So when that lease expires, I'm ready to sail off into the sunset of retirement and move on.
Right. And the other thing is that even from a tax standpoint, there's some benefits to defer taxes, correct?
Yes,
And
absolutely.
with the caveat, everybody on this call is not attorneys or accountants, so this is not tax advice. But Chris is going to explain some of the great opportunities that business owners and investors can take advantage of, doing a sale leaseback with.
Yeah, certainly. And again, thank you for the disclaimer. I'm not a CPA, and this is not CPA advice, but again, it goes to everybody's specific situation. You can take those proceeds and pay your capital gains and move on. You can do a 1031 exchange and defer that capital gains, whatever's perfect for your particular situation.
Right. And if they own the property, they either own the property outright with no debt on it. So they're not getting any benefit of either interest payments or anything like that. They're just paying, 100% in taxes, and they're probably getting some depreciation on it too. But the other thing is that even if they do own it with debt on it, they're not really taking advantage of the equity in their property. So if they go ahead and sell, then they pull all that equity out of their property and they can do with it what they want to do with it. And many of these people use it and put it back into the business it's a great financing tool for businesses. But the other thing is that they can write off 100% of their lease payments and not have to pay down, principal, which you cannot write off, but you still got money going out the door for. So that's a really nice thing about, the sale leaseback for the owner side. Because I have a lot of people, even say to me, it's like, well, why would, any type of tenant even want to, do a triple net lease when they could just own the property? And, there's some great advantages to owning property, but if it's not your main business and your main business is doing something else, there's some great advantages to just leasing.
100%. And the biggest hurdle in doing a sale leaseback transaction is establishing that rental rate, right? And in the recent past, you haven't seen there haven't been a ton of sale leasebacks occur, simply because the rental rate appreciation hasn't kept up with the sale price appreciation. Why does that matter? Well, when you go apply a market cap rate to your net operating income, right, the property ends up being worth less to an investor than it would be another owner user. So for most of these business owners, again, real estate's not their primary business. The idea of selling the property to someone for less than it's worth is not always the most exciting proposition. So that resulted in very few of these types of transactions taking place over the recent memory.
Okay. All right. And then go ahead.
I was going to say, that being said, and I don't know if I'm jumping ahead of on you, but the tide in that scenario is very much turning, right? Especially over the last 18, 24 months. Folks are reevaluating business models. They're reevaluating real estate needs. One thing that is 100% certain is that real estate is pivotal to the business, right? It may not look the same that it did 2 years ago, but there's it's a must-have for the majority of business owners. So tenants that are looking for space and quality space at that, they're willing to pay a premium for rents. On the other hand, the investor community is willing to accept a lower return in exchange for quality tenants and stable income streams. This is known as cap rate compression. So you have these two forces colliding, and it really puts the sale-leaseback transaction back on the table as a really viable option for, again, both parties.
That's great. And can you tell us a little bit about why an investor would want to do a sale-leaseback? What are some of the investor benefits to getting into a sale-leaseback?
Yeah, so investors are acquiring a 100% leased asset day one. That's a big one. If you're an investor and you go in and to acquire a property and there's some vacancy, you're probably underwriting a period of time to backfill that space. So that's a big one. The fact that you have a tenant that's been there for however many years, they probably have significant capital improvements there. It just shows them their tenant's commitment to the building, the submarket, whatever that may be. So go ahead.
So it's a little like a value add, except you're doing all your work up front, and then you're establishing the value up front by underwriting the tenant and underwriting the organization and the likelihood of them moving. But the great thing is you don't have to do any work after that, right?
For the most part, yeah, exactly. I mean, especially if it's a triple net lease, your tenant is responsible for all the maintenance and management and expenses. So, and they're motivated to keep the property in good condition because, again, they're calling it home and they have employees and clients coming in. They have to keep it looking pretty good.
So I'm wondering, in this, staying on the topic of the investor too, what are you seeing is most common on that investor side? Like who's buying these properties? Is it individuals? Is it corporations? Is it groups? Like who's buying right now in these situations?
It's anybody and everybody. You got the big, household name investors and developers. You have the business owners that are closing up the business and 1031 and exchanging into other assets. Folks are just putting capital to work, diversifying into other asset classes. So it's really anybody and everybody. Some of the larger deals are going to be reserved for those bigger investors and developers, but really could be anybody these days.
Yeah, because there's REITs and private REITs that specialize in this, like the Angelo Gordons and some of the other people of the world. Am I correct?
Yep, and Angelo Gordon's headquartered here in Newport Beach, just down the street. So they partner with local operators and investors on a regular basis. I know a handful of them, and they're just, again, one of many examples that are active not only in the Southern California market, but West Coast and even nationally as well.
Nice. And you mentioned
go ahead, Adam.
Yeah, because we were talking about underwriting earlier, and you mentioned one key factor, which is establishing the rental rate. Are there any just, I guess you'd say, tips to stick to when trying to figure out what that rental rate should be, since everything's kind of so volatile right now?
It really comes down to having a team around you that are market experts in their markets. You need to understand market lease rates, sale prices, what's the existing inventory, what new product is in the pipeline, when is that going to be delivered, what kind of building it is, what kind of tenant they're going to be chasing. So there's really a lot of different variables that go into it. But understanding those various dynamics is going to help you, get pretty close to to that quote unquote market lease rate. The industrial market, again, I mentioned it, 1.5%, 2% vacancy. It's quality buildings are at high demand, right? The landlords have their pick of the tenants. And, maybe you agree on a particular rental rate, but you're doing a long-term lease. Maybe the annual increases are a little bit more than they would be 2 or 3 years ago, right? Maybe it's a 4.5% annual bump as opposed to 2.5, 3. There's a lot of different ways to skin that cat.
And that kind of leads into what I was going to ask. So it's, if somebody was looking to get into this, they would definitely want to connect with somebody like you, Chris, that not only knows the market, knows, all the inventory in the market, but also, what the cap rates are and the rental rates. Is that correct?
100%. 100%. A local broker, I highly recommend everybody have their own broker that's representing them and them only. That's another topic for another day, but that will go a very long way. Your broker, again, is going to be a market expert. They're going to know the properties, they're going to know the players, businesses, so on and so forth in that market. And then they're also going to have the market data that I mentioned earlier: lease rates, sale prices, cap rates, what's under construction and where, so on and so forth.
Competition, or whether they can actually move or anything like that.
Absolutely.
Yeah.
So would you do a sale leaseback on logistics space, or do you see it more in the manufacturing, or something that has a little stickiness to it?
I see more of them. It's more frequent in the manufacturing arena and even the medical arena, right? You'll have the single tenant medical buildings. Again, it's a very specialized facility, very expensive, very difficult to duplicate the improvements in infrastructure. The logistics, again, you're seeing some of those, but it's not nearly as prevalent as the manufacturing and even some of the medical offices properties.
And I got one more question for you before I turn it back to Adam. Do you see data center coming up? Because that's more of a specialized build out, or is that not been too prevalent?
I don't see it as much in Southern California as I do in other parts of the country. And I'm, full disclosure, I'm not a data center expert, but I imagine, the cost to build and the operational cost as well is probably going to be difficult to pencil here in Southern California, just with land cost, construction and materials. So yeah,
and
again,
energy cost,
energy cost as well. Absolutely. Absolutely.
Kind of going back to what you were talking about earlier when we were first just getting into the art of using a sale leaseback, what would be a more strategic play for someone other than kind of like the retirement / exit strategy we talked about? You're into your 60s, you're looking to kind of head off into the sunset. Is there a strategic way to leverage them, say when you're kind of younger in your business or career, or like what are some other opportunities that you're seeing in structuring a deal this way instead of just the one that we talked about earlier?
Good question. Being situationally aware is key, right? Almost all these business owners and property owners that we're talking about here, they're getting hit up by different brokers and buyers on a daily basis, right? And most of them have the same spiel, right? But if you can step back from just that quick sales call, understand the acquisition date, the property specs, relevant lease and sale comps. You can tell if, what kind of loan they have, and you can even back into some of the remaining loan balances in certain scenarios. So before I pick up a phone, I know that information at an absolute minimum. So when I do get someone on the phone or I'm having that discussion, I'm armed with some information that not only builds credibility, but is also allowing me to have an efficient and effective conversation with this business owner. They're busy people, right? You have a very short period of time to, explain your value proposition, and to be armed with that information helps that conversation go a lot further. So situational awareness is absolutely key, right? Because if I, again, if I go pitch a sale leaseback to somebody and don't know what the, market rents and sale prices are, you start doing the quick back of the napkin math and, oh, shoot, it doesn't pencil. My credibility's shot, and, I got egg on my face. So you absolutely need to know what's going on in your market at all times.
Yeah, because you're really providing a service to
Mhm.
both the investor and the seller. And again, you're finding them financing, which they might not, ordinarily be able to get a hold of.
Yeah, absolutely. Absolutely. And that's, I love the fact that we're talking about these two types of transactions today, because so often people have the blinders on, and it's, traditional sale, 1031 exchange, refinance it, right? Some people are so tax adverse, they don't explore all the other options. So I'm glad we're shining light on these two types of transactions for sure.
Happy to be doing it. We we try to bring the best out of everyone, and Michael does a great job finding topics like this to bring on the show. So I guess I've got a few more questions here, but I do want to make sure we have some time to get into the fun part, Michael, the installment sales. Do you want to transition?
Yeah, I'm ready to go to installment sale.
Okay.
So if you want to learn about installment sale, let's go.
I do.
I'm going
Let's
to
dive
ask
in.
Chris, what's the other, typical name of an installment sale?
Thanks for the layup. Yeah, the installment sale, also known as seller financing. And, I know a good portion of your listeners are blockchain and crypto enthusiasts, so they'll very much appreciate this option, because the seller is acting as their own bank in this scenario. The buyer and seller agree on a price, a down payment, the terms of a loan. It's all via a promissory note and secured by a first deed of trust, right? And the parties are able to agree on the terms without the restrictions and limitations that, a traditional third-party lender would place on them. And your buyer has the same opportunity to evaluate the credit worthiness of the borrower, just like anywhere else, but also they get to collateralize the deal with the property that they have owned for a number of years and are familiar with. So a lot of the time, this scenario will be viewed as a less risky option than a 1031 because of that familiarity factor. Got
it. Okay. Yeah, you're right, Michael. It's pretty straightforward now that I know.
But the other thing with the installment sale is they can also well, this is my main question. Do they have to own it outright to do this, or can they have debt on it and just pay down the debt with the proceeds from the installment sale?
Great question. That is the first and main box that you have to check, right? Is the property has to have little or no debt. If you can't check that box, it's going to be very difficult for that thing to pencil. So you check that first box, and then, you kind of look at some of the other characteristics, right? They're potentially looking for a steady income stream. They don't necessarily need the lump sum in one go. They often have a highly appreciated asset. It's maybe they're tax adverse. It turns into a tax planning strategy as well. And then the last couple are coincide with the sale leaseback as well. Maybe they're looking to reduce their risk profile. They're getting ready to retire soon, or just want out. So it could be a variety of different reasons that motivate that type of transaction, but the key is little or no debt.
And this is one of Chris's sales strategies. I'm just guessing this, but I know he's using this one. He's telling owners that they can dollar cost average out of the dollar and dollar cost average into Bitcoin.
Your words, not mine.
What have you, I guess if you had to look at 2021 for you, Chris, have you done more installment sales or sale leasebacks this year?
Sale-leasebacks.
Okay, wow.
Sale-leasebacks, yeah. Installment sale, again, it's a really nice talking piece and way to get in front of folks and just, again, provide additional value. But I do more of the sale-leasebacks, especially this past year, than installment sales.
Awesome. Well, I'm trying to think. I know I could definitely cook up some questions here, Michael, if you'd like me to.
I've just got one in terms of the 1031. So if people didn't hear the episode with Bill Exeter from 1031, but a 1031 is a way to avoid a huge tax ramifications of selling your property. So you go and trade it into a like kind thing. So Chris, do you help them, the sellers, on the 1031, or do you work with specialists that specialize in 1031 or specialize in DSTs, or how do you do that?
All the above. All the above. I mean, you obviously have to have an accommodator involved in every one of those transactions, but it really comes down to the client's particular needs, right? If real estate is their core business, they're not afraid to go 1031 into a new asset, and maybe there's some deferred maintenance components or a value add play to it. They're not afraid to roll up their sleeves. But if real estate isn't your business and you're really just looking for some passive income, triple net deals are great options. DSTs are options as well. So again, it really just comes down to understanding each person's particular situation and what they're looking to accomplish, moving forward.
And for those that don't know, a DST is a Delaware statutory trust. It's a special vehicle that allows you to trade property into a passive thing. And we're going to, relatively shortly be bringing somebody on that, talks through Delaware statutory trust too.
Yeah. And I mean, it's kind of sticking on that same topic, right? I mean, one of the hesitancies or drawbacks of a 1031 is you're going into a new property that you're not familiar with, right? And there's time limits and all that. So rather than doing a rush job and just placing the proceeds so you don't have to pay Uncle Sam, the installment sale turns into a good kind of backup plan as well, because you as soon as you close the transaction, the maintenance and management responsibilities become that of the new owner, right? You are now the lender. So you are replacing your rental income stream with that of loan payments that carry none of the risk, right? And then people say, well, where does Uncle Sam fit into this? And the answer is it's a pay-as-you-go affair, right? You're going to pay your proportionate share of the gain as you receive it, and then the interest payments are taxed at the ordinary income rate.
So an installment sale can kind of act as a backup plan if something during the 1031 exchange doesn't go the way that the individual looking to move the capital wanted it to go.
It could be, but you'd have to have that discussion very, very early on, because if you close your sale, right, and that's done, you can't go back and renegotiate that deal after, I can't find an uplake, right? So you have to really explore that on the outset. Yeah,
because otherwise you're paying taxes if you don't
exactly. And again, property owners that they've owned something for a while, maybe they're unwilling or unable to incur the expenses that come with deferred maintenance, such as roof replacements and HVAC systems are big. They're the more common big ticket items. If you're unable or unwilling to incur that cost, the installment sale becomes a good option, because buyers, there's such a need in the market for quality properties. Buyers are willing to pay for it, and they're going to take on that expense and that risk. So really kind of good outside the box option as well.
Okay.
All right. Well, it is time to start winding it down. I guess I know I've got some fun questions in the back of my head here for Chris to close it up. But Michael, you got anything on the topic for him?
I want to
before we
hear
do?
fun questions, and then we might have to edit them out. But anyway,
I'll leave the crypto ones up to you. I just want to know, Chris, next time I'm in Orange County, what's the best place, the number one place to go and eat, or say most recommended by you? I won't say number one.
Oh, wow. Well, we know Michael is a frequent visitor of Las Brisas. You can't go wrong there. But it's in Corona del Mar. It's called CDM Restaurant, and it's somewhat new, maybe around 2 or 3 years. And it's just a really, really good atmosphere, great service, great people watching, and the menu is fantastic. So definitely put CDM Restaurant on your list when you come visit.
Got it. Nice. Michael, any fun ones for Chris?
no, I really don't feel fun today, but I'm looking forward that we will be out in Manhattan Beach, California at the Intelligent Investors Network Conference. What's the dates on that? January?
Yeah. So, and thanks for reminding me. And Courtney, if you, the one who's doing our show notes, if you'd like to put this in there, that'd be awesome. But it's the Intelligent Investors Real Estate Conference. It'll be in January, Manhattan Beach, from the 20th through the 22nd. And I believe Michael will be rocking the stage with his blockchain expertise. Is that correct?
That's undecided yet.
Okay.
So, but we are sponsoring the show, and we will be there.
Awesome. Yeah, looking forward to it. And who knows, maybe we'll see you there too, Chris. So yeah, everyone, thank you for tuning in here to Nothing But Net, the podcast for triple net commercial real estate investing. I'm your host, Adam Carswell. That's Michael Flight, our co-host. And we were joined today by Chris Drzyzga of Voit Real Estate Services. And yeah, Chris, any parting words of wisdom for us before we shut things down?
Thanks so much. Really appreciated the opportunity. I love what you guys are doing. I am an avid listener of the podcast, and like I said, really enjoy following Michael and the Liberty Fund and what they're doing with helping pioneer the tokenization of real estate investing. So thanks again, guys.
You just reminded me, actually, what is the best way for our listeners?
That's right.
And get in touch with you.
Absolutely. You can find me on Twitter, Chris Driz with 3 Z's. And you can also shoot me an email, chrisd@voitco.com. Those are the 2 best ways to get a hold of me these days.
And your website is again?
chrisdryzga.com.
Okay. So you have your own website, chrisdryzga.com, correct?
Yep. And if you can spell the last name correctly, you get extra brownie points.
And
Nice.
Chris, again, works for Voit Commercial Services, or I'm sorry.
Yep. Voit Real Estate Services.
And Michael, where can our listeners go for the latest on Liberty Fund?
They can go to libertyfund.io. And if they're interested in getting more information or getting onto our email list, which has all kinds of not only information on the fund, but also information on blockchain real estate or triple net real estate investing, they can go to hello@libertyfund.io. And if they're interested in attending the Blockchain Real Estate Summit, they can go to blockchainrealestatesummit.com. We not only have the Blockchain Real Estate Summit coming up, but we're also going to have the Blockchain Real Estate Meetups starting again in January of 2020 with some excellent guests, if you're interested in learning more about that.
We'll definitely be checking that out.
All right. Love it. Well, again, everyone, thank you for investing your most valuable resource with us here today, your time. This is the Nothing But Net podcast. Again, the podcast for triple net commercial real estate investing. And we will catch you in the next episode. Thank you once again for joining us here on Nothing But Net, the podcast for triple net commercial real estate investing. If you enjoyed what you heard today, one last friendly reminder to like, share, subscribe, or leave a review for us. It really helps a ton with the show's visibility. For the Nothing But Net team, I'm Adam Carswell. Take care.
Nothing but net.
The Nothing But Net podcast is not intended to provide legal, tax counsel, or accounting advice. Adam Carswell, Michael Flight, Concordia Realty Corporation, Liberty Real Estate Fund, LLC, and their affiliates do not provide tax, legal, or accounting advice, or the worthiness and promotion of any particular investment. This material has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction or undertaking. We highly encourage individuals and investors to seek the counsel of a qualified attorney as well as seek the counsel of a tax professional or certified public accountant to determine if there are any potential tax liabilities or consequences as a result of anything contained herein. All listeners of this podcast or video should understand that there are no guarantees of any success, outcome, or profitability of any transaction or undertaking expressed or implied and will not be liable for any financial or other losses or damages incurred as a result of any undertaking. Go to nothingbutnet.us for a complete set of disclosures. Thank you.